Good afternoon, everyone, and welcome to the Daily Volatility Box report for December 26, 2019. We are TOSindicators.com, home of the Volatility Box. Hope everyone had a wonderful Christmas holiday, whether you celebrated or even if you just got the day off, at least a day away from the markets. I hope you made the best of it and you are ready to get back to the markets today. In tonight's video, we'll take a look at Amazon, and we're going to take a look at a trade that was actually a losing trade, but go through this step by step to see if there's any takeaways from this and show a little bit of transparency, right? It's not always winning in trading. In this case, we'll talk about this loser trade, see if there's anything we can learn from it, and maybe a slightly better way to manage our emotions going forward. So with Amazon, we started off running strong in the morning. We had, plotted on here, sorry, before we start, we have three different indicators. The first is the actual volatility box. The second is the RSI candles. And then the third is the WADA ATAR indicator, which are signified by these arrows, right? And so now looking at Amazon, we had news come out in the morning that Amazon expected a record holiday shopping season right here. And that led to Amazon just jumping up higher from the get-go. So if we take a look at what happened with Amazon, we started off running our candles were green on a 3-minute chart, and then we started to halt, pause. We had a squeeze populate right here. We can see that through these red dots, and that's our RSI squeeze. And that squeeze then ultimately fired long once again. We had that final signal to go long right here, in which you could start to use things like this as a base if you'd like to find more trades outside of even the volatility box. But for the sake of the volatility box, our first entry comes after we've crossed this gray dashed line, which represents our first area of edge, right? So looking at Amazon, that was the first time where we thought, okay, there might be an opportunity to start to look at a short here. Now, if you use just the volatility box, this would have been your entry right here. We started to make a nice move down, but then quickly reversed. However, if you use that triple check method, then you still had to wait for an entry, and that first entry came right here towards the edge of the actual clouds. And this is where I entered into Amazon, waiting for this sort of a signal here, where we've now breached the edge of the aggressive volatility box clouds. So my stop was right outside of this candle right here when this trigger actually happened. And I was looking for a follow through down to what would have been my normal entry point, right? And this is where using options, even a spread on Amazon, it was moving quite a bit where you could have taken out some money. However, we didn't get much of a follow through, and that ultimately led to me getting stopped out right up here, right? And so this is where a couple things to take a look at. The time that I actually got in was close to that 10 a.m. cutoff that we have on that insights page for all of our volatility box members, after which you can start to look at this as just really being a trending move. We can now, while today was a losing trade, see that Amazon did make this entire move outside of the volatility box and is really on our likely trending candidate list for tomorrow, as long as we basically break above this zone, right? Because we've already broken outside of the volatility box clouds. Now we really want to see that we maintain and push up higher in that first 15-minute period after the market opens. And so really those are the two takeaways here. We can also take a look at how using that triple check method helped us get a much better entry to where our stop, while still it wasn't nice to see, and really that first trade out of Christmas being a stop isn't really what you want to see from just an emotional perspective. We saw that we were still able to manage this loss, right? Because this risk for this reward made sense to us, and that's why we took this trade. And usually this is a high probability trade, and so the fact that we've been stopped out here only tells me that, okay, we've taken off that one loser, if you will, from that probability list, and we can now continue taking on the next few trades, knowing that really this was just a series of trades, one of a series of trades, as opposed to looking at the trade just by itself in a zoomed in format. And hopefully that helps to at least manage emotions a little bit. I think this triple check method has been effective, especially with all of the stocks, because that gives you the ability to get better entries, get better option pricing, and really just find a way to take advantage of all of the systems and tools that we have at our disposal. All right, hope that video helps, and we'll look forward to seeing you in tomorrow's nightly update. Also, for anyone trading crude for tomorrow, keep in mind that the inventories report does come out tomorrow on a Friday. So that's something to just be wary of. And so we'll be using our trading plan there, where we start to look at the activity 4 a.m. onwards to determine which volatility box to use. All right, take care, everyone, and we'll see you in tomorrow's nightly update.